Well, good afternoon, good morning, good evening, wherever you are in the world. Welcome to our latest webcast, Global Business Services and Shared Services in Turbulent Times, with a focus on purchase to pay. They certainly are turbulent times. I don't think many of us are flying much at the moment. And this is more like the isolation Olympics, if your life is anything like mine. So we're very much focused on a very interesting case study from ABP about criticality of cash and where it might be. We don't necessarily expect it. So my name is Dan French. I'm founder and CEO at Consider Solutions. I'm here to welcome you. Thanks very much for joining us. We have people from around the world in US, Canada, across Europe, and in Asia. So thank you all for joining us. I know many of you, so welcome back. I'm very pleased to be joined by Steve Fox, who's the Process Excellence Leader at Consider Solutions, but also the former head of Global Business Services at Thermo Fisher Scientific. Welcome, Steve.
Thank you very much, Dan. Appreciate it.
And also very pleased to welcome Gary Steadman, who's the head of Business Services at Associated British Ports, ABP. Welcome, Gary.
Thanks, Dan. Nice to be here.
So we are in various parts of the world. We've got California, Glasgow, and somewhere outside London. So good to be here. And we've got a great case study from Gary and Steve coming up. So in terms of introductions, it's pretty clear what we're here to talk about. I want to just introduce a little bit about the issue of volatility, which we're all focused on, or basically under the cosh of. And the need for fitness in business as a whole and in GBS and shared services, and some of the things that lead us to those thoughts. And then Gary's going to talk us through the ABP experience, where they had a fascinating short cycle road to some very interesting and impressive results. And Steve is going to take us through some of the detail behind that in terms of driving the business value there. And I'm going to come back with some thoughts for the road ahead. As we go through, I'm sure you'll have questions. As you have the questions, pop them into the question panel on your GoToWebinar interface there, and we'll endeavour to answer them at the end. If we don't get time to answer them all, we'll answer them by email. If you have a technical issue, again, use the same interface and one of our team will try and help you. So please ask questions as we go. The webcast is planned to take 40 minutes, so hopefully it'll be a good use of your time. I have got a few questions for you as well, keep you engaged. First question for you is, how do you describe the primary focus of your role? Would you say you are finance and controlling primarily? Would you say a GBS or shared services primarily? Or number 3, process improvement, continuous improvement, process excellence? 4, internal audit, or 5, other? So if you want to try that, it's a nice easy one to open up with. It's all anonymous, but it's just to help you and all of us get a sense of who's here. So 5, 4, 3, 2, 1, pretty easy. Just type 1, 2, 3, 4, or 5. If you're none of the first 4, you're 5. So let's have a look at the results. So the majority, or the single biggest group of you, are in GBS and shared services, and a good chunk in process improvement and process excellence. So that's we're all in the right place in. That's good. So a few words, many of you know us, so I'm only going to say a few words about this, but we've got this focus on world-class or best-in-class. On the left-hand side, you see what that means to us. It's to help them drive the better business results, reduce the cost of finance and operations, optimize cash flow, and have better risk management. And obviously, cash flow is becoming a particularly important topic at the moment. On the right-hand side are the pillars through which we deliver against that, and today we're very much talking about processes and process transformation. And these are some of the organizations we're very proud to work with, so these influence us. It's a two-way dialogue, so we get a lot of stimulus from these guys about how we operate and where we ought to be putting our attention and where our research ought to go. So thank you all too. So we are in turbulent times. Doesn't take anybody to, doesn't take a rocket scientist to work that out. And that volatility we're seeing in every aspect of every business. So it's, you know, to start with, every business, customer behavior is changing for every business. It's not universal either. So if we're in many businesses, some customers are are stopping certain activities, others are charging ahead, some are slowing down, some are waiting, and often it's segmented by industry type. So many organizations will say certain segments of their business are doing really well, other businesses aren't. So it's not even a straightforward straightforward response, which kind of makes things a little bit more complicated. But of course, we're all customers, we're all consumers. So I thought this might bring a wry smile to your face. I was looking for a more recent one, but it's much less legible, so I didn't bother with it. But this is the month of March, the 4 weeks during March, about online interest in consumer purchases over the web. And the most popular choice on the internet, would you guessed, dumbbells. So people working at home suddenly realized they want to work out at home, and prices went up. And I understand now if you want to get dumbbells for your home improvised gym, you can't get them for love or money. More interesting, or maybe more amusing, is number 4, the B-Day. Obviously, people are very concerned about this shortage of toilet paper might really become an issue. So the B-Day makers are in full flush, as it were. Sorry about that. But kind of more prosaically down to kind of business world, external monitors, a mouse for a laptop, external headsets, all the stuff you need to work at home, that's also going really well. So anybody in those businesses is doing really, really well. But there are, obviously there's downsides as well, as we all know. In fact, I did read on the other research, the worst performing segment of online commerce is luggage, which may not be a big surprise because nobody's going anywhere. But all of that stuff, how the customers are behaving, how the revenue line's being more volatile, is also affecting internal priorities. So, whether or not it's not all about everything stops. Some things are being accelerated. We've had to accelerate, all of us had to accelerate all of the enabling technologies for remote working, a lot of those things. So this is not a simple situation. It's not always obvious what needs to be accelerated, what needs to be stopped. And obviously we've got facility closures because this is a health crisis primarily, which has become an economic crisis. We haven't had to worry about this in previous recessions. So whether it's if it's your retail outlets, it's your revenue source, whether it's your offices, whether it's your factories, your supply source, with distribution centers, and obviously shared services and GBS. There's a lot of centers that do scanning of paper invoices, for example. Now those places are closed, so there's all sorts of challenges. The irony is this might be the best kick to encourage suppliers to move digital, because if they want to get paid, you don't want to send anything paper because it's not going to get processed. So that's kind of maybe a kind of slight ironic upside to that. In the sourcing, procurement, supply area, in previous recessions, we've always just said, well, obviously you got slash indirect spend and match direct spend to demand, and then you're good. But in this world, it's much more complex because indirect spend's critically important as we're trying to make sure we kit out all the people we have for remote distributed working. So there's a lot of indirect spend, which is absolutely necessary. In some cases, it might be going up, but we need that to keep the business moving. And then from a risk and control point of view, there's lots of paths. Everyone's got contingency plans in place. We're in full execution mode of those things, and our end-to-end processes are being disrupted with no surprise, right? But those disruptions are causing impact on the P&L and causing kind of in heightened areas of risk, and that's affecting cash, which is obviously a big concern, not just because of social distancing and people being in lockdown, but lots of other impacts. And surprise, surprise, when working behaviors, working patterns change and trouble is around the corner, the fraudsters up their activities because they know we're kind of less alert. So there's been a massive increase in corporate fraud attempts. And then, of course, we've got our compliance regimes, whether it's Sarbanes-Oxley or whatever, we've got to continue to service those. So we've got a lot of challenges there as well. But, in calmer times, we'd just look in the rearview mirror and say, okay, what did we do last quarter, last year? Let's just do more of the same. That's no longer the case. In the world we're in, we can't do that. And again, this might give a kind of drive to some of the transformations that organizations are contemplating and even starting today. What we really need in these volatile times is we can't worry about last quarter and last year. We need to worry about what happened last week, yesterday, and what's going to happen tomorrow. So we need much faster, better information, better analysis, and much more rapid decision making. And we're already forced into that by the nature of external events. And this probably isn't going to go away. So this is kind of, in some of these things are possibly good news for us. So all of these things really lead us to the sense that there's no better time to get fit. And I'm not talking about the home worker buying the dumbbells, although that's a laudable goal. I'm talking about organizations. We're now forced to be more agile. We're forced to move faster. We're forced to change and improve our methods of control. And so this is kind of an idea of organizational fitness. So this is a great time, because we're in the middle of change. We're already in it. So it's a great time to make those changes of habits that get us to this idea of fitness, being able to fulfill the roles and tasks we have. But doing that isn't always obvious. And I've been fascinated by this Dunning-Kruger effect for about a year since I read about it. As you can see, it's 20 years old. It's a piece of research, if you haven't seen it, it's a piece of research that these two psychologists did in 1999, where they mapped on thousands of subjects and intelligent people about the relationship between confidence and experience. And what they found is intelligent people, when faced with a new situation, will quickly assemble some facts and some opinions and very quickly get very confident about their ability to execute, or confident about their opinion or decision they make on it. As they get into the detail of executing it, you tend to slip down a slippery slope, and you find it's actually a lot more nuanced. It's not black and white. The devil's in the detail. All those things we know, and it gets pretty unpleasant. And some people, fall out of that in the middle of the trough and think that they want to be doing this. But those with the courage to go through develop expertise, and they get to the point of much greater confidence. But they never reach the confidence they had when they were naive. Which is, now this might seem counterintuitive, but we all know situations where we've seen that in our own organizations. We've seen big decisions made, which we think, hang on, that doesn't sound, I'm not sure that's going to be as easy as they think. But this affects not just business, it also affects us personally. If you want to learn to play the guitar, you want to learn to be a marathon runner, you want to do whatever, there's a lot of things, oh yeah, it's fairly straightforward at first, but things are a lot more complex. There's a lot more to it when you get into it. So the reason I bring this up is it's highly, highly relevant to the story today and to the experience at ABP, but also I'm seeing more and more around businesses around the world. This affects some key thinking, and it's worth us being aware of. So if you've never seen this before, I'd encourage you to look it up and think about it, because I tell you it affects an awful lot in your working environment. So, so what's not obvious? So typically when we're talking about health and fitness of finance operations, GBS, shared services, we'd say, okay, so we need rapid information, we need to get control, and we've got a smart ERP and good systems. But actually, the assumption that we can rely on our own data, however good our systems are, isn't actually true, or doesn't survive the Dunning-Kruger test. So we have got a view of what's going on, but our suppliers also have a view of what's going on. And we're going to hear a little bit more about that from ABP. So obviously, we want to get insight into the data on our systems, around the P2P process, around any business process, but we also want to match that to what's the outside world. And we're going to show you some examples now of where the supplier's view of their financial situation with us isn't the same as ours. And quite often it's not even to do with any errors we've made, which is an interesting point. So things you might not expect. So think Dunning-Kruger. There's a lot of situations where suppliers often have credits for us that we weren't made aware of for lots of reasons. They might not have applied cash correctly, receiving errors, lots of discrepancies happen all the time for lots of good reasons. Sometimes supplier records don't match ours. Sometimes our committed spend may be overstated for reasons we'll explain shortly. And your balance sheet and your costs you've declared, your liabilities may not be 100% accurate. In fact, the evidence is from all the companies that we've observed this with is we don't know anyone there where it is. So you're going to be an interesting point here. So we talked about looking at relying on your own systems and all the rest of it. So good time to ask you another question. Which of these systems do you primarily use? Now, the vagaries of this GoToWebinar platform says I can only ask you 5 answers. So one of them has to be other. So SAP, 1, 2 Oracle, 3 PeopleSoft, 4 Microsoft Dynamics or Navision or any of those, and 5 any of the plethora of others. So I'm quite sure that 5 is going to be very high here. It's just a way of getting a sense. So you just want to, you can select all that applies. If you use SAP and Oracle, click 1 and 2. If you use all of them, click all of them. So just give that a go. Shouldn't take you very long. I'm going to give you 5 seconds because you've probably got a rough idea. I assume you must have a rough idea. So 5, 4, 3, 2, 1. Let's have a look and see what we've got here. So, right, no big surprise. SAP comes out number 1. 5 didn't come out number 1. So excluding other, I would expect SAP to come number 1. Did Oracle's big number 2. PeopleSoft and Microsoft quite small, so 10%. And quarter of you have other ERP systems. So that's not a big surprise, but it's kind of good to know. So we're in this kind of primarily health-driven economic situation right now, the COVID crisis. But when this is over, when we all work out, our immunity and our testing programs, and we unlock fully, it's still not going to be smooth sailing for lots of reasons. One is business isn't smooth sailing anyway, but we're going to be rough waters and headwinds because we are going into a pretty unpleasant recession. And we certainly don't want that, but that's pretty much without doubt, that's what's going to happen. So in terms of getting organizationally fit and getting ourselves cleansed and ready, this is the time to be doing it. And I think dealing with these rough waters, dealing with issues during the COVID crisis and getting ready for the future as a very good introduction to our next speaker, who's Gary Steadman, Head of Business Services at ABP, is going to share his experience with us. Gary, over to you. Welcome.
Thank you, Dan. Okay, so as Dan just said, my name's Gary Steadman. I'm based in Glasgow. I work in Hull, and I work for a company called ABP. So I've been with ABP around 7 months, and it's fair to say that before I joined them, I hadn't actually heard of them. So let me give you a little summary of who they are. So they're the UK's leading best connected port owner and operator. We've got 21 ports around the UK, facilitating around £149 billion worth of trade every year. We support 119,000 UK jobs and contribute around £7.5 billion to the UK economy. We handle a quarter of all UK seaborne trade, and we also own and operate the UK's busiest rail freight terminal at Hams Hall, which is based just outside of Birmingham in the centre of the UK. We have around 1.5 million square metres of covered storage, so we have a big warehousing business. And we're just starting to get into renewable energy, and sort of last year we generated around 17 gigawatts of renewable energy on site. So our mantra, or our modus operandi, if you like, is keeping Britain trading, and I think that's pretty relevant in the current times. Ports are still operating, goods are still coming in and still coming out, and we're actually classed as key workers right now. So a few years ago, ABP set up a shared service centre in Hull in northern England, and it's a pretty standard setup. So the scope of the shared service centre is procure to pay. So the supplier set up, sourcing suppliers and paying them. The order to cash function, so customer setup, billing, every single invoice comes through us, collection and allocation of cash. Recorder reports, so closing the books, drafting the monthly business reviews and the MBRs that need done. Payroll and travel expenses, master data. So like some of you on the call, we're a SAP shop. So keen to ensure that our data is nice and clean and up to date. We have an internal controls team, which is new. It's something that we just created in the last sort of 3 or 4 months, but that makes sure that we've got a robust controls library and it's regularly tested. In another new team, we've got a continuous improvement team that we're actually going to rebrand to operational excellence soon. But it's a team that was created around 6 months ago, and it's all around how we can operate excellently and continually improve. So when we look at the strategic priorities for the centre, that first point, purposeful incremental end-to-end process improvements, we've got a CI team, and the whole leadership team are all Lean Six Sigma qualified to at least green belt. The CI team are actually all black belt. And what they do is look at the end-to-end view of every process. So it's okay looking at what the shared service center view does, but invariably, as most of you will know, when you can't pay invoices or you can't collect cash or there's a problem with something, it's invariably downstream, not within the center. So it's great to have that end-to-end view. The second thing is the improving the bottom line impact year over year. So SSCs are often seen as a cost drain. So we'll talk later on in the presentation around how we've been able to have an impact on our bottom line. And then that final point around driving employee development. So I class ourselves as a feeder hub, not just for the company, but also within the finance function. So we've got people that we sit down with and have robust career conversations around, put in really good career development plans for them, and they might want to work in the commercial organisation from the shared service centre. I've got AP clerks that are qualifying as accountants and have moved to the accounting group and things like that. So we're really keen on driving employee development. So today's focus is pretty much on procurative pay. So using Illumor as an analytics tool, we've been able to look and measure specific KPIs, and that has helped us identify some roadmaps for improvement opportunities. So some of the things that we now measure, and I'm sure a lot of you are exactly the same, the volume and cycle time of an invoice, purchase order compliance. We have a no PO, no pay policy, but our PO compliance is utterly dreadful. Duplicate payment identification. So again, using Illumor, we get a real-time view of potential duplicates, so we're able to actually stop them before payments happen or released. And then we talk about goods receiving. So we monitor and reduce the 180 plus age balance. When we look at performance improvement opportunities or the defect correction, that's where our operational excellence or continuous improvement team really gives some focus. So we're looking there to drive PO compliance and improve vendor master data health. And when I talk about that, I'm sure a lot of you will be in the same boat. We've had numerous fraud attempts lately, the rife with everybody being in lockdown. And certainly in the last week, we've had 10 or so. So it's been really, really key that our data has been nice and tight and that we have a process around changing that data. Reducing JR over 180 days value and quantity, I'll talk about that a little bit later. Driving tail spend activity to more efficient processing options. So again, when the team did this end-to-end process view, it was amazing where the labour was focused or the non-value add activities were and where we needed to do system enhancements and things like that. So we were able to identify where the spend should be made to help the whole process. And again, the follow-on from all of this is just addressing key internal control components. So when we put our controls library together, focusing on what we needed to do to be in control and nothing nasty happen that the auditors would spot. Then from a value creation perspective, would drive tangible bottom line impact to fund the centre initiatives. And some of the things that I'll talk about on the next slide, I've actually got the income from, and I'm allowed to use that to fund some of the things that I want to do. So whether that's training or system, whatever, it's a spend that I can make based on some income that I've been able to get. Being able to expand the centre's sphere of influence. So when we talk about the sphere of influence, this is that end-to-end view of processes. So going out to the business with a shared service centre view isn't as credible as knowing the whole end-to-end view and involving the business in any decisions you make. So we've been able to add some real good value there. And then finally, we've worked with Illumor and Steve, who we're going to talk to next, on developing a really robust 360-degree supplier scorecard. So when we look at the outcomes to date, we didn't have KPIs a few months ago. With Illumor, we now do. We did an end-to-end review that really highlighted PO compliance as our major focus area. And then that last point around institutionalizing new habits, our end-to-end design work has involved the business. So we've been able to get their buy-in. Change is invariably tough. People don't want to do it. You always hear, I've always done it that way. Why do I need to do it this way? So getting their buy-in up front has been real key. But we've helped move people into new and better habits, and that's helped us move forward. So when we look at defect correction, we work with Steve on a project that I'll talk about in a little bit, but that certainly helped. We've addressed a lot of our internal controls issues with the goods receipting activity that we did. And then we've been informed on the main PO compliance issues. So this is things like people raising a PO for £1 or a penny just to get a PO number to a supplier, or not raising POs at all, or picking the wrong value, wrong lines, things like that. So we've been able to really identify where we can add value there. Then when to talk about value creation, Steve, who's going to speak next, we did a project together around contacting every single one of ABP vendors. So we gave Steve and his team an ABP email address, and they took the work away from us, and they contacted every single ABP supplier, and luckily got 100% of all the suppliers to supply some form of a statement. So the benefit of that was that we identified around £250,000 worth of credits that we didn't know about. And these are not duplicate payments or anything like that. These are old credits that were sitting on AP ledgers from our suppliers that hadn't been supplied to us, or they might have gone to somebody that's now left the business, so they've been lost in the ether. But this was real tangible cash that was just sitting there belonging to us on our suppliers' accounts. So Steve and his team were able to get physical cash back for us, which, I mentioned earlier, I popped in a balance sheet account in my accounts for the SSC, and I've been able to use some of that to fund some of the centre initiatives. So it's been a real great exercise, and one which was incredibly surprising when we got the results through. When we got the every single supplier responded, which again is unusual. I've done this before in previous companies, and I think Steve will probably have a better idea of actual figures, but it's around 60-70% of your suppliers normally respond. So to get 100% was fantastic. But what it did highlight is that 40% of our supplier base had zero value statements. So in essence, they didn't owe us anything, which was great. But what that enabled us to do was really do a deep dive reconciliation into our GRIR account and take out around £3 million worth of liabilities that was sitting there belonging to these suppliers that had told us, don't worry, you don't owe us anything. So these were, again, all balances going back, and sometimes a number of years. I mean, it wasn't very clean at all, and we were able to do some massive work in improving that. So that £3 million liability turned into a good guy in the P&L when we did those reversals. So the other thing that it did, we got statements in, we were able to reconcile the accounts, so we were able to get copies of invoices that we didn't know were due. That again, they get posted, they get tidied up against GR, or we pay invoices that we didn't know were due. And one story is we got one invoice on a statement from one supplier that was from 2006, and time tells you that you don't physically have to pay that, but we did the right thing. We found it, we investigated it, we appreciated that it was due, and we paid his invoice. So it was, I suppose, a good story for him at the end of the day. So when you look at the future, of the SSC, it's understanding the end-to-end. So what happens outside of the SSC, and this is around, what I keep talking about when I say value add. It's very easy for us as shared service centre professionals to sit in our own world and understand what happens there, but getting out to the business and understanding their pain and why things happen is often key, and it really does help us add value to the company. Using our operational excellence continuous improvement team, we've been able to really streamline and enhance processes and cut waste and cost. So to give you an example, our P2P process had something like 165 steps from the very start to the very finish. So that's raising the supplier all the way through to paying the invoice, and that's crazy. So we were able to identify the non-value add activities and cut them out, and question why certain things need done in a particular way. So again, we've been able to be more efficient, we've cut waste, we've cut cost, and the knock-on effect is we've paid more customers on time or more suppliers on time. So we have more control, so we manage risk and performance. And when we talk about control, we had a rough audit with our GR balances, be honest and open about that. But again, this activity has helped us really drive those balances down and give the auditors confidence that we know what we're doing and we're in control. Knock-on effect, we've improved the customer experience, and that's internal customers, but also the internal customers as well. So really making sure that our internal guys focus on what we need them to focus on and they work with us, but also suppliers actually want to deal with us because we pay their accounts on time. And then the final point is better accounting and reporting and hygiene. So the result is a cleaner audit. So I think it's been a pretty worthwhile process from an ABP perspective. So that is it from me. I'll hand the reins to Steve.
Very good. Thank you, Gary. Appreciate the time and the effort in sharing the ABP story. It's great to see how you drove performance, process improvement, and value with data and insight. So as Dan mentioned earlier, my name's Steve Fox. I'm the process excellence leader at Consider. But prior to joining Consider, I'd spent a little over 28 years leading and setting up shared service centers and global business service centers across the globe. So a lot of what Gary talked about, a lot of what I'm going to talk about are things that I've put in place. I've really tried to drive internally as well as over the last couple of years, helping other companies drive externally. So first of all, just to level set us all, you all, if you've been on a Consider P2P webinar before, you've undoubtedly seen this slide. And so it's just a reminder for all of us of kind of how complex the source to pay process is, how many handoffs there are, how many stakeholders there are, and how many more influencers there are in this process. And for those of us that have spent, portions, or in my case, big portions of our career on the kind of the back third of this process, we all know, right? Anything that can go wrong up front does, right? Hopefully not too often, but it does. And those issues or those errors often manifest themselves at the end of the process, which is where there's a massive amount of effort and focus. And so what I'm going to talk about here over the next few slides is give you some real looks at Alumar, which is a Consider set of analytics that we help companies really analyze their source to pay process. So this is an example of a daily dashboard. It's again, I'm giving an example we're working on for our clients, so this is very much customizable. But kind of the first blue banner piece up here is just is looking at summary detail, and that period is customizable and can be moved to a day, a week, a month, a quarter, a year, etc. But that's really to give you kind of a snapshot. As you can see, I've got this set on a day snapshot of input, throughput type of metrics. But the real kind of value from my perspective and how I used these metrics in my world leading shared service centers was you had the top kind of third there around processing metrics, so kind of the KPIs that we use to look at the business at a point in time. The middle section's around defects, and the third or the final, the bottom section is really around compliance and control. And so as you know, right, this is a snapshot. I used it to inform daily stand-ups or to inform weekly huddles. And also it was a key tool I used to really prioritize our efforts and our resources, on a daily or a weekly basis. So again, knowing that you've got the snapshot look, the power with Alumar is really the ability to dive into the details. And this is an example. Gary talked about PO compliance as a key component of the controls they were focused on at ABP. This is an example of just a very quick, kind of one-click drill down into transaction detail. And as again, all of us on the call know, it's the snapshot's nice to look at. The dashboard's great to kind of send a message and inform, but this is where you can really get to the work and kind of, I'll say, the nitty-gritty of what needs to happen day in and day out. And so in this look, in this example here, you have the ability to export to Excel or a CSV file and then really work with this data and drive behaviors with this type of information and drill down capabilities. The next slide here I'm showing is again another drill down capability, and this is really to look at kind of behaviors across an organization. This is an example of exceptions across business units. And so clearly, if you look here, right, you can see, the focus would be kind of getting with the team in Singapore or the team that's working on the Singapore ledger and understand, really what's going on here. We probably wouldn't spend a lot of time if you look at the bottom of the slide with Italy or Ireland, because they're kind of at least best in this class. But we may talk to them to say, hey, what's going right or what are you doing differently to help inform on process improvements. with some of these other business units. But again, the idea here is using the information that we have at our disposal to really take that insight and turn it into some actionable behaviors and actionable plans. And finally, this is kind of the last slide where we're kind of doing drill downs into a little more data. And Gary had talked a little bit about supplier scorecards, and that's an area that I have quite a bit of experience with in my career. And again, this is an example of looking at suppliers, looking at vendors from an exception basis. Now, there's some setup work that obviously has to be done here as far as defining an exception and putting a weighting on there. So you could argue, right, there's a little subjectivity here to it, but this is, again, from the perspective of us and our clients, right, as far as providing feedback to suppliers. And so in our perspective and in my experience, right, this becomes very powerful information to deliver messages, and whether those messages are one-off, talking to an AR manager on the supplier side, or gets to be a little bit of a broader conversation when we're negotiating contracts or negotiating pricing. This can be really powerful information, and I'll say, this is one component of a 360-degree supplier scorecard, but again, it's a very important component because it's really identifying for us and for our suppliers, right? What is where are the issues? Who's causing the issues? And how much work and effort and rework is caused by certain suppliers? Because we know not all the things that are kickouts in our procure to pay process are caused internally, and this is just leveraging the information we have at our disposal to really deliver that message and drive some behaviors on the supplier side, as well as ultimately really be a key lever in driving negotiations with our supply base. So Gary referred to the tangible value creation that he and I worked and helped drive at ABP, and here's a little bit more on that. So far, most of what we've spoken about has been very focused on internal data, internal processes, etc. But the tangible goodness that Gary experienced was by combining our internal data, the ABP internal data, with supplier-sourced information. And the credit recovery effort is focused first and foremost on driving cash flow by reconciling your supplier's records, identifying opportunities to improve cash flow, and then actually going out and recouping those funds. This programmatic approach also improves your control environment and supplier relationships. So kind of at the end of the day, right, when we're talking about this credit recovery exercise, the mantra we have here is that your suppliers may have more of your cash than you know. And in my experience, both is driving this activity as well as consulting firms and companies, large companies on it, there's money there, right? And as Dan mentioned with the Dunning-Kruger curve, right? I mean, even myself, right? I look at this and say, yeah, how much is really there? Until you actually go out and do the activities and you find it. And at the end of the day, from my perspective, any improvement in cash flow and recoup of funds through this process is good news, right, for me. Gary also mentioned the GR&I effort. So, the GR&I effort's focused on ensuring that you only pay for what you legitimately owe, while bringing more clarity to your financials. As Gary talked about, ABP was able to reverse about 3 million pounds in liabilities as a result of this work. And Gary did a really good job of kind of jumping into the details of what they did at ADP and what we helped him do. I think another key factor here, and both Gary and Dan mentioned, fraud is kind of picking up. Aged GR&I, is a prime target for sophisticated fraudsters. So clearing up these transactions greatly reduces the likelihood of fraud in this area. And finally, in summary, my last slide here is that kind of having a 360-degree view of your P2P environment has a lot of positive outcomes, right? Financially focused, controls focused, relationship focused, but ultimately what we're all focused on is establishing a culture of improvement to drive financial and process fitness. So with that, Dan, I'll turn it back over to you to take us home.
Thanks very much, Steve. And thank you, Gary. What a great review of the experience there. I mean, think about that. That's 7 months. Gary's been in post head of GBS in ABP and made a major shift up, stepped up several gears there. and also recovered £3.25 million, so that's about $4 million. So think about that. It's a $1 billion company, found 4 million, through a pretty straightforward activity. So if you're a 10 billion company, that's 40 million potentially. A 20 billion company, that may be 80 million. This is who was it that said a few million here, a few million there. Very soon you're talking real money. So thank you both. That's great. So coming back to this Dunning-Kruger thing, I have to say when I first met Gary and I first met Steve and I first talked about this, I struggled to really see why this would work, why it would generate a lot of return. And I've reminded about this kind of both the Dunning-Kruger piece, but also our kind of belief in internal control, and particularly with the modern ERP systems. We tend to believe that when we have these controls in place, they work. And this is a lovely little image here of a parking lot. If you look closely in the middle, you drive in the parking lot, there's an automated barrier, you swipe your ID card, opens the barrier, you drive through, and the same on the way out. So pretty straightforward. But a controls-oriented person would say, well, that's great, that control works 99% of the time, so we're good, right? But when winter comes and the snow falls, you see what happens. You see all the exceptions. The control is working. The control is doing what it's meant to do, the barrier, but still you got exceptions. And I think over the years, I've become more and more aware that however good our control environment is, there's still stuff that gets through for lots and lots of reasons. And what we're seeing here, both in terms of credits and in terms of goods receipts, which are never going to get invoiced, there's a massive, and particularly times like now when we need all the cash we can get, there's a massive opportunity to clean up and bring that through either to the P&L or to fund initiatives in the GBS center or shared service center, as Gary suggested, or even at these times now where we're talking about a lot of companies having to lay off staff, it's even a way maybe to soften that, soften that as well. So, this is, if there was ever a time to find that stuff, now is it. I do encourage you to ask questions. You've had good stuff from Gary and Steve. I'm just going to bring it up to responding to your questions now, but ask any more that you have. Hopefully that little image will resonate with you, because to me, this is it's important. So I've got a quick question for you here. Given you've heard what Gary has said, his own experiences, and what Steve has explained about how this carries on, what do you believe? To what extent do you believe your suppliers are likely to have more of your cash than your ERP shows? Is it extremely likely? Oh, sorry, Gary.
Sorry, if I could jump in here. I think this is a great question, and it's one that, when I spoke to my CFO about this, she said, you can do it, but it's going to be a total waste of time. You won't find anything. And I worked for a large pharmaceutical company before ABP, had the same conversation with a CFO there, and they thought exactly the same, and we found an incredible amount of money there too. So yeah, it's an interesting one for sure, but I think it's certainly surprising what you can find.
Yeah, thanks, Gary. I mean, that's it's Dunning-Kruger all over. Anyway, the question is pretty simple. In terms of what you believe, not necessarily what you believed when you came into this webcast, but we're listening to Gary's experience and Steve's experience. So what do you think you might have more of your cash, your suppliers might have more of your cash in your ERP shows? Is it 1, extremely likely, 2 to 4, very unlikely, and 2 and 3 are somewhat likely, somewhat unlikely? It's all anonymous, just interested in your views. If you just respond, 5, 4, 3, 2, 1, let's have a look. Let's see what we got here. So that's interesting. So yeah, so the somewhat likely and extremely likely are quite a reasonable chunk of you. So thank you for that. That's interesting. The reason I asked that is because, as I say, most of us, and I think Gary and Steve have had the same view as well, and I had that view. Before you really dig into this, you think it's really unlikely because of the control environment these days is pretty good. So another question for you on a similar topic. To what extent do you believe your costs are overstated, your liabilities overstated through outstanding goods receipts that will never be invoiced? So that's the GRNI thing. That's basically you having costs stated, which you're never going to have to pay for because they don't really exist. Do you think that's extremely likely, extremely unlikely, or somewhat either direction? Same idea. What's your view about that? And again, you may not have thought about this before, but I think this is stunning, the scale of what's been done here. So 5, 4, 3, 2, 1, 1, 2, 3, or 4. Very simple. What do you think? So this is where they got 3 million back in 60 days. So this is goods receipt, not invoiced. So let's have a look. Okay, what have we got here? Let's have a look at the results. So again, somewhat likely. Oh, you're just trying to humor me. Somewhat likely is the biggest. Not many people think that's extremely likely. It's interesting. I think that's kind of interesting about the way we think about this stuff. But thank you for that. That's all good. So an opportunity for you guys. We've talked about this. If this idea of putting organizational fitness in place around P2P in shared services and beyond, there's two things. There's how do you get started? How do you kind of lose that first bit of weight, if you like, and then how do you make yourself sustain it? In terms of there's an opportunity here. It's a fast start. It's cost positive, 60-day program. We can do this with you, for you, or we can train you how to do it. But we can do this. We can provide diagnostics, the cash recovery piece, which is about credits. Remember, it's not just about duplicate payments. It's about credits, which is a majority of this, and the cost recovery piece, which, as I say, was $4 million in ABP's case. If you want to know more about this cleanse idea, and I can promise you there's no juice involved, just talk to us. And we can explain to you how it gets done, and there's an idea of how you might want to pilot it. But have a think about it. But as I say, there's no upfront cost to this, so there's not many situations like that. But of course, that is kind of the losing the initial bit of weight bit. If we want to get organizational fitness, we're talking about sustainable process change, and that requires new habits. And Gary talked about institutionalizing new habits, and it's really, really important. I don't want to bang on about this too much, but we all know, the quick win bit is fine, but making sustainable change is hard. So whether you believe it's 3 weeks or 3 months to institutionalize a new habit, we know the things you've got to do. You've got to have an action plan. You've got to decide on a behavior you want. You've got to eliminate the behavior you want to replace. You need to develop those good habits. You need accountability. So we all know what that means. And the self-discipline, which is sometimes can be an ugly word, but self-discipline, I like this term, the bridge between goals and accomplishment. So it's all about commitment and follow through. So I think that's worth thinking about it if you want to make enter the new world in a really fit state. And I like this quote. This is about from a surgeon, but I think applies to everything in business. There is we're always looking for an easy fix, and we always hope for it. Again, this is Dunning-Kruger all over the place. It's just, but the fact of the matter is nothing that is that easy in sustainable change. It's making 100 small steps go right. So I like that. And then Lender Candy, who's a CPO at Johnson & Johnson, made this statement. He wrote a paper about this last year. It's really powerful. You can read it yourself. And he's just saying, if you can have visibility across the business, what decisions might you take differently? Well, you've already heard some decisions you could take differently because it's been worth $4 million to $1 billion business. So taking Lender Candia's quote, to what extent do you believe, if you had that visibility he talks about and what Steve talked about in terms of visibility across all your transactions everywhere in the world you do business, whether it's trends, throughput, defects, variances, all that stuff, are you very confident you have that, or extremely skeptical you have it, or somewhere in the middle? Pretty straightforward. It's what Gary and Steve talked about it and what Lender Candy has just said there. What do you think? It's anonymous. 5, 4, 3, 2, 1. Let's have a look at the old scoreboard. What do you think? So somewhat confident. So a lot of people are somewhat confident. There's quite a lot. There's 25% of you, sorry, 29% of you who are extremely skeptical that you have that. All right, that's good to know. And then this is just if you want to hear more about experiences on these things, just type 1, 2, or 3. It's not so we know. Would like to know more about performance diagnostics. We'd like to know more about the vendor credit recovery, more about GRNI, or none of them. Just do that, and that's fine. And then we're going to move on to your questions. So pop that in. Right. So thank you very much. So you've given us questions. If you have any more questions that you haven't already put into the system, please send them by email and we'll deal with them. We are 10 minutes over, actually 9 minutes over. So I'm going to take a couple of questions and we're going to have to close it down. Apologies, we've overstayed our welcome. Anyway, I'm going to come up with a couple of questions here because you've asked some really good ones. So this is going to share this with my colleague. So surely if your internal controls are in good shape, you won't find these misstatements of cash and cost. Okay, so Gary, do you want to say a few thoughts on that?
Can you say that again, Dan? Sorry.
If your internal controls are in good shape, you won't find these misstatements of cash and costs, question mark, I guess.
Yeah, I think you know, great question, but I think these are small values, and invariably they are credits that were supplied to you by your supplier. So, you know, in the case of the things that we found, it was stuff from a couple of years ago, for example, that had gone to a person in the company that had left, and they hadn't done anything with that credit note, so it wasn't posted anywhere. So no matter how tight your internal controls are, you're just not going to pick things like that up. So that's what we found. I think we were tight in ABP. We only found a couple of duplicate payments, and the rest of them were just credits that fall into the category of we just didn't know about them. There's no way of knowing about them unless you're reconciling your supplier statements. And the beauty about the statements that Steve and his team requested is it's not your bog standard statement that comes with outstanding invoices on. It's actually everything from their ledger, so how cash was allocated, unallocated payments, stuff like that. And that's where you normally find these balances.
Thanks, Gary. Steve, you got any thoughts?
Yeah, and I would just absolutely, and I just echo a little bit of what Gary said, but you know, kind of leading shared services in my past, you know, the Dunning-Kruger, you know, curve was very applicable to me. We're not going to find much of this. There's not much of this out there. We reconcile our ledgers, our GR&I ledgers to the sub ledgers every month, but the reality of it is, I have yet to see a company, either that a function either I was leading or I was working with other companies on, that didn't have you know, these hidden and kind of, I'll say, untapped reserves of cash. They're there now. Some companies may do a very good job of cleaning the sub ledger and the detail up, but for most of us, it's exactly the opposite, where it's something we kind of do the reconciliation and move on. The other bit is suppliers don't send copies of credits very regularly anymore, and definitely don't send statements. And that was a big part of this effort, was reaching out to the suppliers. And many of them, you know, were very quick and happy to accommodate our request, because you know, we're kind of doing some of their job for them, right? I mean, we're talking to AR leaders and AR representatives that, you know, they're used to calling us and asking for payment status, but you know, this is just a flip of that. So I think that was another kind of big learning and benefit from this. Okay,
thanks very much, Steve. Gary, I mean, one point I'd make is a lot of these things go back in time. So even if you've really sharpened up your internal controls, you know, it's difficult to sharpen up internal controls on the past. So you need both good preventive and good detective controls. One more question here. We've done recovery audits before, and they require intensive use of our time and tend to find very little. How much of our effort does this require? Steve, you want to talk about that?
Yeah, Dan, I'll start with that. You know, here's what I'll share, right? Is the approach we have, you know, and what I've used in the past is meant to be very light touch. Right now, of course, you can be as involved or uninvolved as you want, but the idea here is, especially, you know, if a Lumar is in place, it's a very, very light touch, kind of a 30-minute, you know, kind of a weekly status update call. There can be some validation steps that you may want to take and look at yourself, of course, right? But at the end of the day, we kind of pride ourselves on the fact that it's an easy startup, it's quick to generate a return, a tangible return, and that the ongoing effort is designed to be very, very minimal. But again, as I mentioned, and you know, Gary, you could talk a little bit about your experience here. You know, you can have as kind of heavy a touch and a hand in this as you choose to, but the design is to keep it pretty light, versus kind of a classic recovery audit, which requires a lot of data up front, a lot of review, you know, maybe some on-site visits and on-site time to go through documentation and system access. So this is meant to be just the opposite of that.
I guess one of the points about it as well is most recovery audits focus on duplicate payments, and as we've seen, duplicate payments are typically much fewer and smaller value than the total number of credits. And of course, credits you can only find out from looking at the supplier side. So Gary, got any thoughts?
Yeah, and I think, I'd echo what Steve said. I think, for us, it was very, very light touch, but we made sure it was that way. So I wanted Steve and his team to drive this process because, my team needed to focus on getting unpaid invoices paid and working on and process. So, what we did, we set Steve's team up with an ABP email address. And they contacted our suppliers. We did some of the reconciliation, but we were going to do that anyway. And we also supplied them with a list of open credits, so the credits that we knew about. So if they didn't appear on these lists that Steve and his team were working against, then it was highlighted as a benefit, and we physically received the cash as well. So they got refunds for these things back. So from our side, I'd say maybe 1 or 2 hours a week spent on doing the process end to end, and I think it's all around the setup, getting the setup right, and if it is, it should be pretty smooth sailing.
Great, thank you. Well, we've got a bunch of other questions. I am conscious we're way over time, so I'd like to thank you all for your attention. I'd like to thank Gary and Steve for taking the time out to take us through the experience. Gary, you made great steps in 7 months. You've got a lot to be proud of, you and the organization. So thank you all. If you've got any other questions you haven't asked and didn't put into the system, send me an email. My email address is there. All the other questions we'll deal with and respond to everyone by email, and we'll send them out to all concerned. If you see your questions already there, well, you can't see that, can you? Anyway, send the question. Thanks very much, and have a great rest of your day and rest of the week. Bye-bye.